to the Trading Market Technicals Morning Call video for Monday, December 17th. Hope everybody had a great weekend. And we have this week is going to be a full week of trading. And then, of course, we have half a day on Monday and Christmas on Tuesday, which the markets are off. So we're going to have about 3.5 days of trading. So this week is going to be very interesting. This week is also options expiration. Usually the markets have a bullish bias to it, so we'll see what happens coming into today. Markets are up small right now. E-minis in the overnight session were up at least 5.5, and now trading around 2.5 handles. So last week we had, I was looking for a little bit of a pullback on Wednesday, and I said I'm looking for a 1 to 3 day pullback going into Friday. We'll see what happens. Sure enough, we did get a little bit of a pullback. Friday was a not so bad of a down day. Dow down 35, Nasdaq down 20, S&P down 5.5. So we did get a little bit of a pullback, but the pullback was bullish if you read into it. Very slow grind, low volume pullback. There were some stocks that were kind of beaten down, but if you look at the performance on the day here, Dow Jones for the week, all of the losses were very minimal. 0.15 for the Dow, S&P 0.32%, Nasdaq 0.2 of 1%, NDX 0.47%, and then Russell eked out a small little gain. And then if you look down here, you see some of the retails were down a little bit. Mixed bag, brokers up, home builders up 1.11%, biotech up 0.52%. So we look down into the CRB index, up fractionally, gold down fractionally, silver took a really hit, yet, and GDX, the miners, had a nice little bounce. Dollar down again, and that's why we did get a little bit of a bounce in our gold sector. So let's take a look at speaking of sectors, let's take a look at what we did here. Basic materials up 1.3. Industrial goods, conglomerates, technology, all fractional gains higher except base materials. Seasonal time of the year, we're going to get base materials to move higher. Ags usually move higher. And we haven't seen it, but we supposedly should get a good gold bounce, but we haven't seen that yet. And again, doesn't have to happen. Utilities lower, services, consumer goods lower as well. Indices, take a look at that. U.S. dollar down big, and as you can see, oil had a decent move up. Gold slightly lower, and then of course Russell eked out a small gain, and our indices all lower across the board for the week. Now, my guess is that, and we don't like to make predictions. We just like to see what I'm looking at. And over the weekend, when I do my analysis, I'm looking over 100 plus charts, and I do see a bullish bias to the upside. Now, this is going to be a tricky week, right? We're coming into this fiscal cliff issue. We're coming into the year end, okay, which is generally positive. We haven't seen that little bit of a rally as of yet, but some of the seasonal indices that had that seasonal strength are rallying, and I mentioned the ag stocks. Coal was doing really well, which I liked for the last couple of months. So this is going to be an exciting week because this week's going to be the last full trading week, and then we're going to come into the next 2 weeks of Christmas and New Year's. So I think that if anything, the markets may have an additional pullback. Now, this fiscal cliff issue, I think it's going to get resolved. I'm not really too worried about it, but it's how the markets react to what's happening with the fiscal cliff. Now, if the fiscal cliff does get resolved, right, this issue gets resolved, I do think the markets are going to rally, but then I think the markets sell off into that. And that's what I'm going to be watching on a daily basis. So take a look real quick on our econ data, then we'll run into some of our indicators here. Empire Manufacturing today. We have the housing index tomorrow, and obviously continuous claims, GDP, third estimate. This is going to be important here, and then of course personal spending on Friday. Michigan sentiment also is a big do as well. So keep an eye on what happened. Not too much today. So basically going to be driven on any kind of technicals and or what comes out of Washington today. And also, of course, the ECB. All right, so let's take a look at some of our indicators. I want to look at our NYMO, which is our trusty McClellan oscillator. Down at the -3 area, so we did sell off for a few days, and there's plenty of room to go before we get extremely oversold. So just again, let's just keep an eye on this, that we do have room on both sides if we do rally, but there's plenty of room for continued selling before we really get oversold, dramatically oversold. Okay, take a look at our daily NASI. And this one here, this particular had a nice little dead cat bounce from here, from this November low, and now looks like it's starting to curl up here. It hasn't done so yet, but this is still on a buy signal. If we look at our weekly, as you can see here, this is the weekly 5-3 stochastic. This has been on a buy signal for the last 4 weeks, and this turned up nicely. Now, even this, despite of Apple selling off, the Nasdaq, which semiconductors, seasonal time of the year, has some strength going into the end of the year and usually into the second, third week of January. So this still here is on a buy signal. Okay, now if we look at the bullish percent, S&P, right up at the 66th percentile, again still on a buy signal. We're not really overbought yet. So this market can move and it can rally. I wouldn't be surprised if it doesn't. CPC, put call, reading still bullish. Again, no real fear in the market. If we look at our VIX, we did have a couple of we had a bounce for 3 days, obviously, but nothing exciting that we did break out. Now, I like to see a breakout into this 19 area. If we get outside this candle and we close in, it's going to be a buy signal for the markets, for equities. Black candle as well, as you can see here. We came back in, equities rallied, as you can see here in the S&P. All right, so we do have some room to run, though, so we do have some additional days. We could sell off at least today, tomorrow, maybe Wednesday, then rally Thursday, Friday, and, of course, into next week is usually a big sign. Markets do want to rally at that time. We have big hedge funds, mutual funds. They position size their portfolio for year-end markup. So just keep that in mind if you're looking to get short. And this is our Nasdaq record high percent. And I always mention look at the pattern recognition here. Usually 2 or 3 weeks we roll over. So we haven't done so yet. We started to roll over, but we're still at the upper end of the range. So we could roll down to this maybe 15-20, and then maybe get one big dramatic drop, one big down day sometime this week, and then we come into this area here, and that would initiate a buy signal to the market as well. Take a look at our dollar. U.S. dollar weekly has this big head and shoulders pattern, neckline coming in here at the 78-ish. We're back down here now. We did close lower for the week. I do see some dollar strength coming into next year, but as of right now, we do see a head and shoulders pattern. Haven't broken out yet, so this bearish pattern has not triggered. Okay, so let's take a look at our daily. If you look at our daily chart here, we are sitting on this upper trend line, which we hit for the 4th time. 1, 2, 3, 4, and we did break below it. So we'll see if the dollar has some strength here and it can bounce back up. We do have some confluence area of resistance here at the 80.25, and of course 80.83. So dollar's going to be key moving forward. There is dollar weakness, but what I'm seeing here, that I'm seeing a decent rally running into the end of the year here. I would like to see 1 or 2 days, big down days on volume, get the week longs out of the market, and then a nice big push into round. Then we can look to really start buying some, really buying equities with 2 hands going into the end of the year. Now, as you know, history does repeat itself usually, and we do have our Santa Claus rally every year. That does not have to happen. Just please keep that in mind. Okay, just quickly on the 10-minute, let's go right into our indices. 3-day rally mentioned right up in here. We had that big gap up, and now we started to roll over. 1, 2, 3. Here's Friday. Tested the low S1 back into this area, this little channel area. So now it's going to have to prove itself that we're headed back higher. And really, I'd like to see a really break above 142.91 on the S&P, on the spiders, to really get going and to reverse the short-term downtrend. 142.91. A break of Friday's low, coming in at 141.87, that would initiate continued selling to the downside. Those are the 2 numbers I'm looking at today. S&P cash weekly chart, not bad, but we do have a little bit here of a reversal candle. And if you can see this area here, this little candle right up in this area here, that is something that, for me, we need to really watch now. This came out with a little bit of a spinning top, so this is a weekly chart, guys, so it's not gonna really take effect until the end of the week. But we'll see if this can keep this area very thin and short range for the last week. So this is going to be interesting if we get an outside day reversal, whether it be to the upside or to the downside. So I'll be watching that closely. Here's our ATR chart, average true range. We did move down lower, so that means we rallied nicely. So if we are carving out a top here, volatility should pick up, and that should increase volatility with the average true range starting to creep back up here. And that's something that we're going to be monitoring now. This is going to be basically on our daily charts again. I watch this every day, and I look at it, but as you can see here, volatility starting to creep into the markets, and let's see if we get this ATR to move up back higher. And that could say to me, well, wait a minute, here's our high, lower high from here, and that means that we should be moving lower. Now, that has not happened yet. So we could have a 3-day pullback on lower volume, which we've had, and then the markets continue to move higher. Here's that slanted neckline I drew last week, and I said, look, we popped back above it, but we had that reversal candle, and what I didn't like was the fact here that we reversed back and broke this little slanted neckline support. So I was saying about maybe possibly a head and shoulders, left shoulder, head down here, and then the right shoulder. So keep an eye on what's happening. We're back up, back below it. Maybe this could be really forming another right shoulder, chopping around for 2 days, and then really start to break higher again. That's what I'd like to see. And something like this, even if we break back lower and chop around for a couple days, that's going to be constructive for the bulls. CCI broke back above this area, and now we're back below it. As you can see, how weaker we are from our last rally here, from our top. And here, if you take a look at here, we broke back above it. And here we didn't even get it. We really didn't break back above it slightly. And then we had one last push up. And then we just immediately sold back off again. So the rally here is much weaker than we had back in here. And now we're carving out, seems to be carving out a lower top here. So again, constructive. But I like to see this market not get below at least the 20. 1390 on the pullback would really be a line in the sand. 1390, even 1380 for a little bit of an extension. But I wouldn't want to see much lower than that. Here's the Spiders daily, same thing. Break below that slanted neckline. Now maybe we carve out a little bit of a right shoulder right up in here. Get below the 140, 140. Wouldn't want to see past 140. 138 would be a little bit too deep for a right shoulder. But, nonetheless, let's see what happens here. We had a little bit of distribution, as you can see, and we are overbought in our stochastics. And our MACDs have not curled over as of yet. Histograms are still back above here, so constructive again for the bulls. But I see an overbought. We're getting to be overbought, so even if we break back below this 140-ish area, maybe 2 days consolidation, unwind this overbought reading in our indicators, and then we move higher. That's what I'm looking for getting towards the end of the week. So really anything could happen between now and Wednesday, but I do see us coming into bullish sentiment, unless obviously something changes coming out of Washington. Bollinger Band, 30-minute. As you can see here, energy is building in the markets, so we're going to be looking for another move. The Bollinger Bands does not say what direction, but I would say that maybe we break lower, get back into the 14, 1390, and then move back higher again. But again, that's just me. This is not telling us what direction. It's just telling us that energy is building, and expect a move in the coming days here. At least a big move one way or the other in the coming days. All right, SPY, we had a target of 145.25, and we hit 144.48, 144.50, within about 50 cents. I think that's pretty good for government work. So let's see what happens now. Moving on, I'm going to take this inverted head and shoulders off. We do have a larger one, which I don't have now on a 60-minute chart, but we'll see what happens in the coming days and weeks. Diamonds. Now the Dow Jones have been a little bit more stronger than the other indices, and I really don't like to see that. Brick and mortar, going into the brick and mortar, more of a safety stock, safe haven. This is not what I want to see. I want to see really the Russell start to rally, the NASDAQ, in which NASDAQ is not going to rally. But if you take a look here at the next chart, you'll see XLF. We hit that little, that nice long-term trend line like I mentioned 3 days ago, and we started to roll back again. But you can see here, volume is light. So a lot of these key sectors are giving pullbacks, but on light volume. And here, transports hugging above the upper end of the range. This is really good for the bulls. If we can break back above Friday's high, okay, we took it all back, but if we could break back above Friday's high, I think we're going to have a big run for the highs in the transports. And again, seasonal strength is upon us on the transportation sector. IWM's Russell had a little bit of a pullback for 3 days, but as you can see here, low volume. So this is really a bullish sign here. Nice big left shoulder head, right shoulder carving that out a little bit more, which is fine, as long as we don't break below the 50-day moving average. But watch the Russell intraday, guys. If you're looking at the Russell, you should be looking at it on an intraday basis for strength or weakness. That combination of the dollar and some key big cap tech stocks, that could get you get you on the right side of the trade for the intraday trade. Take a look at Apple here. Now these are my notes from weeks back. We had negative divergence, which we called that top right around that 690 area. Now I said a break below this first trend line would likely test the 467. Now, we have tested it again. This is the second time. And I had mentioned maybe a right shoulder with a big head and shoulders. We didn't even get to that right shoulder, which is very weak here. So I see tax selling coming in, which is almost virtually over here. There's a lot of negative sentiment coming into the stock about the iPad, the iPhone. Now, this could continue. If we do break this area here, and this is a weekly chart, we'll wait for next week, but if we break this area, unfortunately, I think we're going to see that 467, which is that longer-term trend line here. Daily chart clearly shows, we said the same thing here, watch this support area. If we do break this support, we're going to retest the lows. Here's my notes from a few weeks back, and sure enough, here we are again at the 61.8% retracement, or from the highs here. So this is this looking pretty ugly. We did close. Now you can see this. We did close just at the Bollinger Band line. So this is not. I like to see what happens today. If we get a flush, maybe we get a flush back into this 467, 480, 490, and then roll back up again, and maybe get a nice year-end rally. Barron's had a piece on Apple saying that they need to buy back shares to stabilize the stock. Either that or maybe announce some sort of a special dividend, which we're getting late for as well coming into year end. So this is something we're going to watch. This is a big damper on the NASDAQ and the S&P, guys, although it hasn't really showed signs of it. But this is, to me, looks like in a stock like this, we'll probably flush out a lot of longs. 3 days of just constant gapping lower and season and weakness in the stock, it's not a good sign, especially coming into the holidays. So this is something that we're going to continue to monitor, and this might put a damper in any kind of rally. But we'll take a look. We'll take it one step at a time. As you can see here on the Stokes, we are oversold, and we're starting to curl up here again. We had a nice big distribution day on Friday, so we'll see if this follows through. To be quite honest, I like to see one big flush and then a nice big year-end rally, but we'll take it from one step at a time. All right, guys, that's it. Have a great day. Have a great week, and we will talk to you tomorrow. Again, please use your stops because anything can happen here. Make sure you're nimble in your trading for the day. Have a great day. We'll talk to you tomorrow morning. Take care.